Well, good day. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Wednesday evening, the 8th of March, 2023. And we're giving here about 6:25 p.m. Central Time. It's my mom's birthday. She's gone, but Mom, happy birthday. So in looking at all these markets and where we're at, I'm uncomfortable in the sense that the Fed chair told you that we're going to go something between 25 and 50 basis points. They're data dependent. And the big piece of data staring us in the face come Friday morning. That's the jobs report. You finish the 2 days with the Fed chair. They're determined they're going to 2% inflation. The naysayers can take it and do whatever you want with it. The Fed was certainly attacked, and rightly so, as the different reps and senators said, the Fed has a terrible track record of keeping us not only out of a recession, but something worse, causing a lot of unemployment. And there's no answer for that because it is fact. I wrote about it today in my newsletter. I showed the results going back to 1900, the different recessions and what has happened. And the problem is the lag effect. And I think Fed Chair Powell certainly alluded and said it did all the right things with it. I gave him an A+ again today on what he said. Simply put, you do these things and you're fighting something that happened from COVID. For all practical purposes, we had helicopter money. We were just giving money away, keep the economy going, and we created the inflation nightmare. People couldn't wait. They lined up for the money. I didn't get any of it, but a lot of people got the money. They took advantage of it one way or the other. Well, who's paying for it? We are. It did keep the economy going. Was it the right thing to do at the time? Probably, but it probably lasted too long. And that was another thing that was brought up today. You have to do what you have to do. If you don't save the patient, you don't have a game left, right? So you do what you have to do, and it's always going to be wrong at the end, all right? You're going to create inflation, you went too far, whatever it is. Well, that's what they're saying right now about interest rates. Oh, you're going to create unemployment. I don't see a way for the Fed not to create unemployment. If you raise interest rates enough, the idea is that you choke the economy, not kill it. You choke it, you stop inflation. If you stop inflation and price points, if you're a businessman, business slows down. Business slows down. Do I really need all these people? What's kept it going is the naysayers say two things. Number one, I can't get the help, or I couldn't get the help, both parts of that argument. Who I have, I'm scared to let go. Everybody says it's going to be a shallow recession. Well, if I don't have help, I can't survive. Think of what you're hearing. Tell me I'm not saying those exact things. I saw the restaurant numbers today. They're up across the country in pretty good shape. What's the one thing that all the restaurateurs are saying nationwide? I need more help. Okay. We saw the JOLTS numbers. You still 10,800,000 jobs have to be filled. Come on. So it's down from 11 million. What did it fall? Not even 200,000? That's pretty darn strong. ADP added today, what are they, 280 some odd thousand jobs now? Okay. So I'm looking at JOLT strong, I'm looking at private sector still strong, and I got a jobs report, and if it comes out super strong, is the Fed going to go 50 basis points? Probably. What's super strong? We're already building in 224,000. Are they going to revise down the 517 from last time? Nobody knows yet. What if they revise upward? What if the 224 comes in at 400,000? I'm going to repeat. When I know I have a major event happening in the futures market, this isn't the stock market, in the futures market, I step back just like that, hard. You can't beat that silver bullet train coming down the road at 200 miles an hour. You might trip, you might do something, you might zig when it's zagging. Why are you trying to do it? Pick up the pieces afterwards. And that's now you say to yourself, okay, I pretty well know what the Fed's going to do. The market will absorb it before it even happens, and I can go back to trading until the next FOMC meeting. I really believe that's the case. So you do with that what you want. Where are we fighting in the S&P? Well, if you don't believe me when I tell you markets have a way of going to the 18-day average and sitting there. I teach this in my full charting course. The neutral number on most charts is the 18-day average of closes. And I know you'll say, but Ira, I used the 21 or I used the 20. We're in the ballpark. It's that zone. If you're down hard, you rally to it. If you're up hard, this was unusual that the market went right through it, but before it kept challenging it. And then when we went back up, it was the resistance. Learn how to work with this. That's the first thing. Next, what is a trend? Well, in a downtrend, you have lower highs, lower lows. An uptrend, higher highs, higher lows. Where are they? Develop a technique that pinpoints them for you. I did with the swing line. I built it so 25 years ago, my 13-year-old son could sit down with any group of individuals, and we were traders and stock people and whatever, and I could bring them out like my toy. Tell him what the trend of the market is. He'd put this on. Dad, there is no trend, Dad. There's an uptrend, downtrend. What's the risk? He would tell you what the risk is and walk out of the room. He can do it to this day. But if you don't have these on it, you don't know where you're at. You're guessing. Oh, then you're going to tell me the chart pattern. Okay, is it a dog? Is it a double bottom? Is it a cloud formation? I want to use something that, number one, you don't have a choice about in terms of where's the line get plotted. Number two, who cares? Everything has to fit in to make the trade. There is no trend at this point on a daily chart, the S&P, the micro mini. You have a lower low, higher high. That is not a trend. The battleground is the 200-day average again, but this is the only one of the indices that's fallen to that number and fighting there. The others haven't just yet. You can see where you're fighting. You can see the battle, that it's not the Bollinger Band, it's that. Between that and the 18-day average is your battleground now. When we come over and we look at momentum, you're no longer oversold. That's not necessarily a good thing. If the market decides to get bearish and get through 39.71, be careful, especially if you close under 39.68. You're opening the door up for the 3900 level, and because you're not oversold, you have momentum to the downside. That's if it occurs. I don't know if it'll occur or not. When I come over to the NASDAQ, it had been fighting the 200-day average. It's not quite down there again, as you can see. And just like the S&P, is this trending? No. Am I surprised? No. Because the pro money looks at these big events, and yeah, they may take a flyer here or there, but you yank in all your capital. You don't want to get stepped on. Higher high, lower low. Very difficult to make a call. Dow, higher high, lower low. Here's the 200-day. Again, you haven't hit it recently. You were playing with it back here. You're close to it, but you haven't hit it quite yet. And you're not even trying to do anything with it in the Russell. You came back down to the Bollinger Band to find support, but again, higher high, lower low. I think my case is made. In the bond market, why is the bond market futures rallying? When they rally, it means yields are falling. Oh, just like TLT, if you watch the ETF. The very back end is saying, hey, we're listening to the Fed. We see what has to be done. They're not interested in the far, far back. Whatever they do, they have control over the short-term end of the yield. And that's why it went out to 107, 110, the 2-10-year. And this has just been left to drift. This isn't bullish. This is a bear market rally. You had lost the embedded reading. How many times do I tell you, you've got to learn the embedded reading? And if you take a look at this, and remember I say, often, not every time, often, when you lose an embedded reading and you get a close over 21, before the market does a new low, it is going to try to get to the closest main moving average. For me, that's everything. Number one, if I want to play it, I'm betting that it's going to go there. Number two, if I'm short, it's telling me run. Run, run, run. In other words, get out of my shorts. Market, now I'll show you this, comes down, and I know you're going to say, oh, Ira, you're not right. Okay, I know what you're going to tell me. Bingo. Right where it had to go, and now market's sitting there. What did we do in this market? Let's flip back here. Got to go back one day. didn't lose the embedded reading today. This is Thursday now that we're trading. It's flirting with it. Do I want to press a market that's flirting with losing that number? No. Do I want to be considering covering my positions if I'm short? Yes. Is the trend down? Yes. But you're losing that momentum. I'm going to repeat. If you lose it, the odds favor you're going to make a run to the closest moving average, all right? I know where I'd have a stop under it. You got a big report coming out. I just don't want any part of it. In the dollar index, what are the odds of staying over a Bollinger Band? 5% of the time. So I want you to be the guy that's going to say, I'm buying it over that. This is the time it's going. That's how Vegas gets built. You keep going, keep giving them the money, and Vegas gets itself built. The smart money goes, nope, I got to take money off the table. I don't have to be a dollar trader. I can go trade the Aussie. I could trade something else. That's what you learn to do. You have an overbought position into the Bollinger Band, knocking on the door of the 200-day average, and you want to be a hero. Okay, and I know why. Because the Fed's going to keep raising rates. You got it figured out. Let me tell you how many times I've had it figured out, and it came out exactly what I figured, and the market goes the other way. Are you laughing at home? Because it's happened to you too. In the euro, higher high, lower low, and down and fighting at the 100-day average in an oversold position. So long. Bitcoin. So Silvergate today, at the end of the day, they're out of business. So they're in now with the Fed approval. They are getting out of the business. Bank is closing. They hope to pay back their depositors, which is a good thing. It's not going to be a black eye. Out they go. They're the first. There will be others, I predict. I've been predicting this all the way through. Not the avalanche that we had. We've already seen the worst of the event. But as the regulations hit, as the financial requirements hit, as all this bad press is hitting, and I mean it's bad in that, it's still not going away. You are not going to get rid of Bitcoin, Ethereum, the stable coins, and so on. They are here to stay. So the ones that get through this, they come about, and away we go. That's how I'm looking at it. It's sort of like pork bellies. They were the wild market in commodities, all right? You know, they've seen the movies with it. They're not around anymore. But commodity trading, futures trading as it became a huge business. Same thing that will happen with that. In Brent versus, by the way, I don't believe in those coins because I don't know what they're worth. I think they're just a speculative vehicle. That's my own opinion. But I'm seeing what they have done, and I want to just go and say that. You know, I could be very wrong. Maybe they'll have a value. To me, they're a tulip. You speculate, and it's got no other value. There's nothing behind it. It never materialized to be an everyday transaction business. Blockchain is a bit different. Blockchain's not a crypto. Higher high, lower low, nothing here. Now, you're sort of caught. Let's discuss the energy for just 1 minute, and then I want to be done. If interest rates go soaring, it's like a tax on everybody. And that tax takes pressure onto the market. So that means you're consuming other things. You're putting your money elsewhere. You're not going to go on as many trips as you thought. Blah, blah, blah. We see that the numbers, there's a lot of arguments going on as to how much real crude oil we can all produce, how the world economy is going to do. And a lot of people are still talking $100 crude. I don't see how you get to 100 in an environment where you keep raising interest rates to fight inflation. That's me. That doesn't mean I'm also seeing a big decline, because the lower you get this number, you're at 76. Where is the U.S. going to start buying oil for the strategic reserve? According to our president that doesn't know how to be quiet about it, he's told us from $70 on. That's where he wants to replace it. So you've got something of a floor that the market may want to test him on, but you have something of a floor because I really do believe we have to replace our strategic reserves, and there will be pressure on whoever the president is to do such. That's where you're headed with all this. So I do think that that will be the case. Gasoline, I like here. All right, so I think the pros are nibbling right now into the 18-day average. The word is nibbling. It's still only March 8th. It's early. but not that early anymore. And they'll see what they do. This could be the area where you come down, and remember, this is May. I got rid of April already. So this could be the area where traders start saying, you know something, maybe there's some option strategies, maybe there's other plays, maybe I do some spreads. There's different ways to do it, but I think they're getting involved from the long side starting on this break, okay? In that gas, you're about as neutral as you can be. You're just sitting at the 18-day average. So what am I going to do? What about what? I'm going to be waiting for Friday morning. And Friday morning, I can tell you already where I'll be. Let's see if I can't even bring up what we had there. Sorry about that. I will be, number one, writing my reports, watching the market, and like a tiger, waiting to jump on different things. Soon as that number comes out, I have different strategies. That's nice, but I got to look at the charts. At the end of the day, do I pay attention to my strategy or to the charts? Always to the chart, not my strategy. My strategy tells me what maybe will happen, but the chart tells me what to do. Do you understand the difference? Like a Jekyll and Hyde, you've got to learn to separate the two. So I'll be doing that. We will be writing on all this at Linn. If you want to get our newsletters, and they'll be blasting out right afterwards, they're free. Sign up. I don't have our ad running, just simply behind this. Just move your cursor to the top. It'll say free offers. There'll be an icon. Give it a click. Sign up for what you want, and away you go. If you want to learn how to do the Bollinger Bands the way that I do, go to our website at iraepstein.com. Under the word education, it's all laid out there for you. Outside days, too. Outside days are important, not like Bollinger Bands, but they're very important because they're continuation or denial of a continuation pattern. So really gives you a bit of an edge. Meanwhile, I'm Ira. You have a good day. I'll see you first thing in the morning.